Good day everybody. In this video section, I'm going to be discussing a very important topic, which is the Forex risk management. My name is Ajide Shalom Tomiwa. We are going to be talking about Forex risk management, which is the 1% rule. What does the 1% rule says? What is the meaning of the 1% rule? The 1% rule says that at any point in time, when you are trading with your capital, you are not risking more than 1% of your capital. For a beginner, for a pro, it is very important to use proper risk management, and which is what the 1% rules imply. Why is the 1% rule very important? The 1% rule is very important because it protects your capital. Because you know that at any point in time, you are only risking 1% of your trading capital. Just for example, now you have a $1,000 trading capital. If you calculate the 1% of a $1,000 trading capital, you are going to be getting $10. So you know for every trade you are only risking $10. Even though if the trade went in profit or loss, you are only risking $10. So it is protecting your capital because you are not exposing all your capital to risk. Another thing is that it keeps your what? It keeps your emotion in check. Your emotion will be in check because you know that you are not risking too much on any particular trade. So you are going to be relaxed. Unlike if you are risking a large amount, a large percentage of your capital. So 1% will allow you to be able to emotionally controlled. Another reason why the 1% rule is very important is because it keeps you consistent. It keeps you consistent. Even if you trade and you lose, you still know that you still have a lot of room to trade. No matter how bad your strategy is, you still know that you still have a lot of room to trade, and it is not realistic to lose 100 trade in a row consistently back to back. No matter how bad your strategy is, it is not realistic to lose 100 trade back to back, and you know that you are only risking 1% of your capital. So you still have a lot of room to trade like that. So now, how are you going to be applying the 1% rule, 1% risk management in your trading? It is very simple. You just have to identify the currency that you are trading. For example, if you are trading GBP/USD and your stop loss is 10 pips, on the trade, and you have already calculated your 1% of your trading capital. Let's assume that you have 1,000 trading capital. You have already calculated the 1%, which is $10. So you are just going to sync it with your stop loss, which is 10 pips. So that means you are going to use it to calculate your lot size that you are going to be using for that trade. So the lot size that you are just going to be using for that trade will be a 0.1 lot size, for you not to be able to risk more than $10 on that particular trade, because you don't want to risk more than 1% of your trading capital. If you don't get the explanation very well, you can also endeavor to use Forex calculator. It's going to help you to be able to manage your trading very well, your risk management. You are just going to enter the necessary variables, you are going to get it. So I'll tell you for a fact, the Forex industry is not an easy industry, but it's worth it. And I will tell you for a fact, it is better for you to preserve your capital than making fast money. Forex trading is a journey. It's a journey that you have to take step by step, I know most beginners, we come in, they want to easily make the quick bucks, the quick money, but it's not like that. If you are aiming to make quick bucks, quick money, you just end up losing and losing and losing and blowing your account all over and over again. It's not that you are not going to lose, you are going to lose. That's why you should what? You should put the 1% rule in place. The risk management is going to allow you to be able to preserve your capital for a lot of trade. And at the end of the day, if your probability is right, you are going to come out with profits. But it's not a quick thing. So I will I will encourage you to use the risk management, which is the 1% rule. For every trade that you are taking, make sure that you are not risking more than 1% of your trading capital, and make sure that you are managing your risks like a pro, to be able to grow in this forex industry, to be able to preserve your capital. That is how to apply our forex risk management, the 1% rule. Make sure that you subscribe to my YouTube channel, make sure that you like my video, and make sure that you come back for more and more video. So that's it for this video section. Thank you very much.